Hi, welcome back to Elements in Focus. My name is Aaron Rheaume, the Director of Financial Planning. Today I have Sam Neff with me. Sam is a certified financial planner that bounces back between our Indianapolis office and our Brownsburg office. Sam is also the leader of our advisor team. Sam, welcome. How are you doing today?
Wonderful, Aaron. I don't know when this video is going to go out to the masses, but just finished up a wonderful Easter weekend. Weather's been great here in Indiana, so taking advantage of it. Got a little sun. I see you did too. But
Absolutely.
just blessed to be here. Yep.
Well, great. So, for those of you that may be tuning into the first time to our Elements in Focus video series, that is where the team and I break down our five critical element process, as you can see on the screen, your life after work, all the way down to legacy planning. And usually we're giving you things to think about and maybe some things to think differently about. So Sam's going to cover our fourth critical element today. That's risk management and life happens. Usually that is tied into an insurance topic, but also risk management floats back into the investment playbook a little bit based on market diversification. Sam, when we talk people through economic downturns, which we're experiencing right now, how do we help them prepare for that? And what are some things to think about?
Yeah, thanks, Aaron. So when we talk to people about their financial journey, we have to hope for the best, expect the worst, right? So we are coming off of back-to-back wonderful growth years in the S&P 500. As of today's recording, that market is down 10.5%. So this is where we will harp on asset allocation, asset allocation, asset allocation, and just making sure that we have the appropriate investments in the appropriate accounts for the appropriate goals, right? So, some things that help in an economic downturn are having some cash on hand. So, building up that emergency fund. Yes, it's no fun seeing that statement come back from your checking or savings account that shows you that you earned, 42 cents on the money that you left at your banking institution. But in a time where you need cash, it's very nice to have that excess cushion because beyond just market conditions and economic downturns, sometimes people's jobs can be at risk. So making sure that we're able to account for any sort of emergencies via that emergency fund are really, really important as we consider kind of where we have our asset allocation and what we do with the money that we have. Other things to consider if you get to a moment of uncertainty is just your overall cash flow, right? So ultimately, we refer to that here at the Financial Enhancement Group as your standard of living. Now's the time to maybe batten down the hatches and start looking at some of those subscription services that you had in the past that didn't feel like they were much, but they're not bringing any real value to you, right? So if you really, really enjoy something, we're not necessarily suggesting that you make that disappear, but how many unnecessary things do we have in our life that we can eliminate from that standard of living to stop some of that stress at home? Items that can help with cash flow are looking at some of the debts that you have. So, if our goal in an economic downturn is to make sure that we have some excess cash on hand, making extra payments towards things like a mortgage may not be in the best interest for you because that money starts to disappear. But if you have large chunks where you could potentially eliminate a debt of sorts and get that cash flow back, that might make a lot of sense to help alleviate or alleviate some of the stress on the bank account of continual debt payments that are coming out. But a lot of what happens during these times is going to be dependent upon where you're at in your financial journey. So if you are maybe a younger accumulator, it's always a good time to focus on what marketable skills can you have. Are there things that I can potentially do to make myself attractive if I need to start looking for another piece of employment? Hopefully that's not something that happens. Some of the younger folks will start to refer to things as side hustles that can help bring on additional income. For those that are a bit more established, it may make sense to start doing some acceleration of some things that you've been doing in your financial plan, right? So down markets are the best time for us to start focusing on accelerating some of these Roth conversions, where we can take depressed IRA assets, move them into a Roth IRA account, and then hopefully see those assets start to increase as the market recovers. And then ultimately, as we think about everything that's going on in down market, economic downturn type situation, the biggest thing is just to make sure that whatever plan you are working with, you're sticking to, because the plan was put in place for a reason, right? And so if we have built something that hasn't been able to handle this type of situation, then it wasn't a very good plan to start with. So I know it's easier said than done not to panic in these types of scenarios, but that's basically where, if you have any questions, pick up the phone, give us a call. We're happy to talk through those with you, and make sure that you're staying on track. Aaron, do you have any questions for me?
I don't, Sam. You covered a lot of good things in great detail. I have 2 points of of what we do internally at FEG as part of our risk process. And so every Thursday goes out our market carver, where our allocation team is talking about what's happening in the market and economically. Internally, because of our allocation team and they're process driven, we have a risk barometer that allows us to tell us how much in the equity market we want exposure to. Do we want to be offensive, neutral, and defensive? And so those are things that we are working on your behalf, lowering those equity positions and moving those into more of bonds and cash. And then secondly, over the course of the last 2 years, we've been adding different types of investments inside of the portfolio called alternatives to help with some of that risk management and diversification. And I said 2 things, but I'm going to say one more. So we're going to go to a third. Last fall, we rolled out a new process to assess risk here at FEG. So our risk tolerance process has changed. And what we're really trying to do is making sure that the true ability to assess risk and handle risk is lined up in a speed limit fashion. And so those things we're helping you with, those are conversations that the advisors are having with you in the offices during your family update and tax planning meetings. So those are the types of things we're doing internally. If you have questions, please reach out to the team. You can go to yourlifeafterwork.com, fill out the contact us form. If you have specific questions, send them to us. Talk to FEG at yourlifeafterwork.com. And if you're hearing this as a new person to FEG and want to understand maybe where you align in the 5 critical elements, schedule your next steps complimentary meeting. That's where we'll sit down with you for an hour and a half, review your situation, give you things to think about today, things to think about in the future, and if we decide to partner together, things that FEG will do for you in a written plan. So scan that QR code, call us 800-928-4001. We've got an advisor team that is more than capable of helping service and take care of your needs. Thank you so much for watching our Elements in Focus video. We will see you next week.